Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. Here are 4 things the New York Times article got right about long-term care insurance. And I quote, they said, many experts believe it is untenable to expect that a private insurance market can protect most people from the growing burden of long-term care costs. That is 100% true. Way to go, New York Times. Long-term care insurance is not for most people. At least 50% of retirees do not need long-term care insurance because they can qualify for Medicaid-funded long-term care. Now, why is it that so many people can qualify for Medicaid-funded long-term care? Not talking Medicare, I'm talking about Medicaid. Why can so many people in this country qualify for Medicaid-funded long-term care? Because it's pretty easy to qualify for Medicaid-funded long-term care. In most states, a married couple can qualify for Medicaid-funded long-term care if they have $730,000 of home equity and $159,000 in savings. About half of retirees would fall within those parameters. People in that demographic with those parameters probably should not buy long-term care insurance. What's the second thing the New York Times got right in this article? Quoting from the article, last year, insurers paid more than $13 billion to cover 345,000 long-term care insurance claims, according to industry figures. Many policyholders and their relatives reported that their plans helped them avert financial catastrophes when they faced long-term care costs that would have otherwise eviscerated their savings. Way to go, New York Times. That's 100% true. Bravo. Despite the misleading headline that long-term care insurance falls short, and despite your half-true quotes, long-term care insurance works for hundreds of thousands of claimants every year. According to the NAIC Long-Term Care Experience Report, the long-term care insurance industry has paid over $200 billion in long-term care insurance claims to over 1.5 million policyholders. Check out the show notes for links to that data. What's the third thing the New York Times got right in the article? Quoting from the Times, they said, but others have been startled to learn that policies they paid into over decades will not fully cover the escalating present-day costs of home health aides, assisted living facilities, or nursing homes. That's right. That is also 100% true. According to industry surveys of policyholders who have made claims, one of the biggest regrets is that they did not buy more long-term care insurance. Long-term care insurance companies don't decide how much coverage someone should buy. The consumer purchasing the policy decides how much coverage to buy. Also, most policies purchased in the 1980s and 1990s did not have any inflation protection. Now, fortunately, that's changed. Most people who have purchased long-term care insurance over the past 20 years have purchased long-term care partnership policies. And those long-term care partnership policies must include some type of inflation protection. What's the fourth thing the New York Times got right? Quoting the Times, they said, but the insurer said that there was not enough evidence that she needed help with 2 daily living activities or had severe cognitive impairment, conditions that would trigger benefits. In 2022, the proportion of traditional long-term care claim denials varied from 4.5% in Rhode Island to as high as 9.6% in Alaska, according to the National Association of Insurance Commissioners. This is also 100% true. In most states, like Rhode Island, 19 out of 20 long-term care insurance claims are approved. In some states like Alaska, 18 out of 20 long-term care insurance claims are approved. Long-term care insurance is a legal contract. If a claimant does not meet the benefit eligibility criteria, the claim has to be denied. Fortunately, most of the 7 million long-term care insurance policies in force today meet the federal guidelines. That means that in order to qualify for benefits, the policyholder must need assistance with any 2 of the 6 activities of daily living, or must require supervision due to a cognitive impairment. In the next episode of our analysis of the New York Times long-term care insurance article, we'll discuss something that they got very wrong.